Hi there, traders. This is Brad Gilbert with today's trading action. All right, now let's just have a look at the market because there's some very weird things happening, right? It's been a bit of a rebalancing sort of couple of weeks, and if I just give you a look at euro, right? We've had an up down situation where dollar strength and dollar weakness and dollar strength again, dollar weakness, and now you're seeing it getting beaten up once again with this dollar strength. Now, what I can sort of really isolate the problem, and understanding the market is the key component to this. So I just can't help but update the trend lines there. The Now you come back here, like this is where you got to use some of the tools that we've got, right? The interest rate tracker. This should give you a good overview of where things what's happening. Now we've just had the Fed meeting, right? And I'm a bit pissed off with Jerome Powell that he came out and said, we might be scaling back interest rate cuts going forward. Well, the market's 73% factored in, all right, for another 0.25% cut coming up in December. So so with that likelihood, you have a weaker dollar, right? Well, if you come and have a look at just at the core market functions or components, I should say. Now, the long dated bonds are much higher, right? Which suggests a stronger dollar, right? The short dated bonds are lower. Um, so price is up, bonds down. So that's the yield down, I should say. So we've got a real mismatch here. The equity market, right, is going through the roof. So we've got a bit of a risk on profile. That means euro, sterling, Aussie, Kiwi should be rallying and the dollar should be falling. But the bonds are going up, right? And this is the problem. It's creating so much uncertainty in the market around where is the dollar going here? That is the big question. And you know what? Besant and Trump being over in Japan, they didn't go over there to sort of say, hey, you know, how you going? Buy some weapons. They were over there to say, listen, you better start hiking rates. You want to, and what they're basically saying is, we want the dollar lower against the yen, so they're more competitive against Japanese products. Now, we got that initial move here, right? This is where Besant came in. Now, they didn't hike rates and it's gone through the roof. So, what happened here? This is the destabilization of the market. Besant comes in and says, you got to get tough with your monetary policy, which means raise rates. So, the market factored in an interest rate hike there. They come out and don't do it. And the market got so caught up in a yen move, right? A strong yen, they've all been screwed over, right? And that's where dollar yen is at the moment. So the market has just been absolutely getting turned over. And that's the way it is on dollar yen. Obviously, the yen crosses and a lot of the major currency pairs because the ongoing strength here that came out of that, and then it's just crushed because with that, sorry, let me just come one back one step. So with that initial move, right, dollar weakness, right, we did start to see all of these instruments start to rally. Okay, Aussie, and then we had the Aussie CPI numbers, which came out stronger, even support a stronger move. Um, these were going up. Then the crazy decision not to raise rates, which makes sense because you can't roll out stimulus and then hike rates, sees a big correction in dollar yen. The dollar's up, and then it discombobulates against all the major currency pairs. Okay, so to me, just understand that the markets are not easy at the moment. And what I should be sort of saying is the dollar, the majors aren't easy, right? So just come back uh, to the crosses here, and this is where it gets a little bit skew-if. Now, the market, right, has been turned over. Now they're expecting a hike. It's 69% factored in. Japan hikes next time, December 19. It's like that's not exactly helpful for us. Now, the crosses, what's happening on the crosses? Well, let me just get the pen off there. Let me just sort of scroll down a touch. If we have a look at the crosses, right? ECB on hold, 97%. Bank of England on hold, 68%. Bank of Canada on hold, 89%. RBA on hold, 99%. And then if I just scroll down to the little battler there, these guys are the odd ones out, right? Another cut, okay, 25 basis points, November 26, 84% factored in. And then you got Swiss National Bank on hold. So everyone's on hold, right? So that means, you know what? The movement in the crosses isn't going to be easy either. So where I see the action is the crosses against the Kiwi because the Kiwi is they're looking to cut, right? Well, and Japan are looking to hike, right? They hike. What happens to dollar yen? Dollar yen goes down, the yen goes up, but it's higher at the moment. So we've got this discombobulation in the market and it is crushing traders. And I don't just mean uh, our traders. I mean, I've been turning over a bit of cash myself, but it's more like the whole market is sort of trying to chase the market, but they're not recognizing the conditions at the moment. And you can see it on the chart. Well, you can see on the chart, this is the deceiving thing. You think, oh my God, there's just really good, strong dollar fundamentals at the moment. There's absolutely not, right? They're expecting the Fed to cut, so that should be lower, right? They were expecting the Bank of Japan to hike. They didn't. And that's the problem this week. That's what has discombobulated everything. I'd be sort of sitting back and just taking your time at the moment because if we come back and have a look at what's coming out today, there are some things coming out that, in normal market conditions, you'd be sort of having a look at. The manufacturing numbers out of China, important for Aussie and Kiwi. Does it impact? I'm not sure. Nationwide house prices in the UK. Will that impact? I don't know. I'm not sure because the markets are discombobulating. You got the inflation numbers out of the Eurozone, you got GDP numbers in Canada, and then you got the personal income PCE price index out of the US. This on a normal day would be a really sort of nice day to have a couple of trades on and just let them roll out. But at the moment, we're not seeing that at all. So I'd be sort of taking a backward seat. Let the market, let the traders who don't understand what's going on beat themselves up. And then you can come back and have a look at, where the opportunities are next week. We need the markets to calm down, flush out the discombobulation, right? So what that means is the dollar should catch up with what the bonds are doing. Now, if I just come back here and have a look at the yen, right? You keep an eye on the beast, right? You know, having a look at that move down was brutal, right? And this is where the market got turned over. This is, you can see very clearly where Besant came in, basically told the Bank of Japan he was applauding them. So, oh, you're doing such a good job. And just make sure you raise rates. Okay. So we get the dollar more competitive. And they didn't do it. Right. So we saw the big clean out on a lot of these pairs. Okay. And then what's happened? The market's been completely stopped out and baffled. But this is the thing, right? Like there's a trade coming up here that is amazing. If the Fed cut rates and Japan hike rates, well, dollar yen will be right at 130 or thereabouts. It's going to be a huge move. So make sure you just keep focus on the yen crosses, right? At the moment, there's been a massive flush out. I still think getting ready for a move to the downside is 100% on the cards. And this is, and like, how do we know when it's going to happen? Well, you can check around the actual release dates, right? If you come back to the interest rate tracker, we know what days they are going to be, the next meetings are, right? December 10th for the Fed, December 19 for the Bank of Japan. And then we're like, well, it's October 31st, Brad. What the hell do we do now? Well, we keep an eye on the market. The numbers, okay, the numbers that come out from here will reshape the potential outcomes here, right? Japan, I don't see much change there because their numbers are pretty consistently bad, right? Whereas the US, and this is the situation, we don't have any US numbers to really work with. So, you know what? I'm expecting, and this is where I think Jerome Powell was mistaken. He says, we're not sure about any more rate cuts. He should have said, we don't know what the data is. And I tell you what, if the numbers come out weak, we could see a massive cut in the US, right? So wait for that. This is the problem when there's no US numbers coming through. We don't get the true indication of what's happening in the market, and we get the central bank sitting back on their heels, just trying to sort of say, well, we're doing our best, but how can we cut if we don't know everything's weak? Is generally the interpretation I'm getting. So there's some great moves coming up. At the moment, we don't see it, right? You don't see it at all. You look at the just keep an eye on the follow the trail or your global markets page here. If I just get that one up there, it has all the global equity markets in it, right? If I just get that up, then you can sort of keep a close eye on what's going on, right? And the Nikkei has been very active. Okay, so the Nasdaq, okay, up through the roof. Yeah, having a great day, up 1.2%. Then you come down to just looking across Asia. Okay, the Nikkei up 820 points, up 1.6%. Like, what the hell is going on here? If they're hiking rates, right? I know it's a month away, but we're seeing some outrageous moves here. And for those traders who aren't aware, right? Generally speaking, if the Nikkei goes up, dollar yen goes up, right? That's how it works. Okay, guys. So that's a bit of a wrap for me. It's more about just understanding the markets at this point. I can't like just go in and say, hey, let's just jump on board. I'm looking across the live signals and then sort of keeping track of what's going on. But even still, I'm sort of sitting back thinking, things aren't lining up. And if it's not lining up, why put good cash into the market guessing, looking for that small winner? Wait for the trade. It's probably early next week, and then we can start again. All right, guys, have a good one. All the best. Cheerio.